Worries about the future of the US economy fail to dampen markets. Welcome to Market Insight. I'm Ludovica Brignola. It's the last trading day of the third quarter. Stocks are up, gold is at a record, interest rates are falling, and benchmark oil prices look set for another quarter of losses. But among the 32 professional forecasters surveyed recently by the National Association for Business Economics, 39% cited a monetary policy mistake as the greatest risk to the US economy over the next 12 months. By contrast, 23% regarded the outcome of the US election, and the same number cited an intensification of the conflicts in Ukraine and the Middle East. So what are the risks? Let's ask Anna Rathbun, Chief Investment Officer for CBIZ. Thank you very much for being with us today, Anna. So let's first talk about that NABE survey. Where do you see the biggest risks coming from? Monetary policy, the elections, or geopolitical risks, and why?
You know, of those three, I would probably put geopolitical risk in the back burner because that's more of a slow-moving risk and actually a risk that changes every day. But the first two, the Federal Reserve as well as the election and the outcome of the election, and I don't mean just the White House, I mean also Congress, I think that's going to be very important to the economy. First, the Fed, I can understand why economists feel that way because the Fed has a history of being late. Just a few years ago, they were slow to respond to inflation. And there is a full expectation by a lot of experts that the Fed will also be late in responding with a cut or cutting cycle. And that's because the Fed is data dependent and the data that they're looking at tend to also be backward looking. So it's not so much that the Fed isn't, doing its job. It is, but it's just the nature of those things. And as for the election, I think it really will come down to whether we have a one-party rule, what kind of Congress we will have, and what kind of laws are able to be passed, especially on the tax cuts from 2017. The fate of it will depend on what Congress looks like.
Right, and backward looking, you say, and what did you make of Friday's inflation reading? How data sensitive is the Fed really at the moment, in your opinion?
Yeah, I think the Fed needs more confirmation of the things that they have done. Number one, that's the 50 basis point cut, and then the things that they've said afterwards. So if you look at some of the Fed officials and what they've been saying, they've been sort of supporting that 50 basis point rate cut and potentially more for the rest of the year. And so the Friday PCE number definitely confirmed all of those things. And that was really, great for the markets, except for the fact that we had already priced a lot of that in and you didn't see too much market action. But, fundamentally, the question really is how much of the fall in inflation is actually a correction from when inflation was too high and we're going back to normal, and how much of it is, have we passed that point and things are actually slowing down, and some of the softer inflation readings are more reflective of a slowing economy? And that is a question that we can't answer today, but we'll probably find out in the next several months.
Right, so at the beginning of this interview, you yourself said that geopolitical tensions are pretty important and prominent at the moment, but so far, both oil and equity markets really seem unperturbed by the escalation that we are seeing in the Middle East. Do you think that's wise?
So in terms of the equity markets, there isn't too much exposure to the Middle East, right? So if you look at the S&P 500, the big worry is really China. And rightfully so, because a lot of the revenue is derived from China. So I think even from a fundamental perspective, the markets, are not going to pay that much attention to it. What was surprising was actually the oil market. But, if you think about oil production as well, it's really Iran that we have to worry about, and things have not escalated so much and hopefully never will. And so crude oil market has been relatively calm compared to how much disruption has been going on there. And the other piece of this is really on the demand side. China's economy has been slowing down, and China is a big consumer of crude oil. So the slowing down of Chinese demand has had an impact on oil prices as well. So there are a lot of things that are going into these prices.
Right, Anna, on this very point, right, China. So US-listed Chinese stocks are tracking domestic indices higher, a bazooka of government stimulus, but economic data really remains poor. So Is this good news or bad news then for investors in Chinese stocks?
Yeah, I mean, if you think about the 50 basis point rate cut from the Fed, having done it after raising rates, understandable. And then you've got the PBOC that's cut 50 basis points without ever having raised rates. That tells you something about the ailing economy, right? So fundamental view is not very good. Now, this was a lot more, the stimulus was a lot more than what people expected and what the markets expected. So there's clearly excitement, not only rate cuts, but also $115-ish billion to support the stock market. And there was a whole bunch of it. And also to support certain industries like the EV industry as well. There's a lot of promises, but the problem there is structural. It's not necessarily monetary, right? So a few structural problems. You've got the balance sheet problem of having too much debt. They still haven't figured that out yet. They've got a population growth problem or lack thereof. And then they have a geopolitical problem. So let's say that they're flooding the global markets with very, very cheap EVs. Can they get it to the United States or to Europe if the countries there actually enact protectionist policies? And that's where the geopolitical problem really is going to be a sticking point for China as well, no matter how much they're flooding the markets with cheap exports. So I'm not entirely sure that this, as you call it, a bazooka, a stimulus would actually have an impact on the fundamentals of the economy.
Thank you very much, Anna Rathbun, CIO of CBIZ, for all your insight. And that is your market insight. You can watch more videos on Reuters.com.